Hi everybody, welcome to another edition of the Lunar Orbit podcast, where I provide timely updates and fresh thoughts on the Terra Lunar ecosystem. My name is Gerry, and today is Monday, the 21st of March of 2022. In today's episode, we're going to be covering Sigma Finance and its whitepaper drop, the shared security for Luna, and Terra owning the curve wars. Okay, let's get into it. Okay guys, first up we're going to talk about the Sigma Finance white paper drop. So this seems to have passed without too much fanfare. There was obviously a few people early on that got a bit of a sneak peek of this and broke down what some of this means, but it's also now open to the public to have a look at. So this thread here from harry.ust is excellent, well worth the read, and also Stader Labs have an excellent thread on options in general. So Sigma Finance is an options protocol that's going to be running natively on Terra. Now, this is a really brief overview of what options actually allow, but it allows you to open up leverage positions on assets without any risk of liquidation. It's also used for hedging positions to the downside. So, covering a position to make sure that you're not overexposed if there's a big drawdown, and also a way to generate some ongoing yield in the form of premiums. I won't go into it in too great detail, but yeah, check out this thread from Harry and from Stader if you don't fully understand how options work. The one aspect of the white paper though that I really wanted to bring up was this Luna put vault, which is what people could use to hedge their risk to the downside. But what I thought was really interesting in this illustration is the potential just of this one aspect of the protocol. So I'm just going to try and talk through it now. It is a little bit complex, so bear with me. But basically, to make this Luna put vault work, it needs UST. So a user could come in and deposit UST. They then create the puts, which is basically a sell option. Someone can come and buy that option to basically lock in a sell price for Luna, for instance, and they pay a premium for that luxury to do that. So that's the third step. Then the deposited collateral and the options premium goes into the anchor protocol and starts earning interest at currently 19% interest. And then the final step after it's all been released is the original deposit, the options premium, which the buyer paid, the anchor interest, and some SIG rewards goes back to the UST depositor. So it was kind of this side I really wanted to highlight, that instead of just depositing UST into anchor and earning 19% yield, you could deposit UST into Sigma, earn the 19% yield plus the options premium and the SIG rewards. So you're going to get a greater yield by using this. So I can see a lot of people who want to basically get extra interest on their UST could come along and deposit it into this protocol. So that is going to be very useful. But also being able to hedge your downside risk could be a super popular strategy, and I can totally see guys like Lunaomics and Cephii working out a strategy on how to leverage up your Luna position in a relatively safe way and play off on both sides of this. So say you borrow $50,000 against your Luna position, they might work out that you could at a certain amount maybe put $20,000-$30,000 of that towards buying some puts to cover downside, and then have the other $20,000 going into generating those puts and earning the interest. So you're going to cover your downside position, but because you've leveraged up via anchor, you'll own more Luna, so you'll have a lot more upside, and you'll also earn extra rewards through this as well. So it's just a matter of time before these sorts of things play out, and I can certainly see this is another pull for UST. It's going to draw more demand for UST, and this is just one element of what this protocol offers. Feel free to dive into it deeper. It's pretty complex, especially if you're not that familiar with options. They're a complex financial instrument that is used in traditional finance, but all the details are in here. And if you want a higher level primer, check out this thread from Harry, UST, and Stader Labs. They're well worth the read. Before I continue, if you're new to the channel, welcome. Hi, I'm Gerry, host of the Lunar Orbit podcast, where I provide regular alpha and updates on all things Terra Luna. And if you enjoy this content, consider supporting the channel by smashing that like button, hitting subscribe, and hitting the notifications bell so you get all my videos in a timely fashion. So next up, the shared security for Luna. What am I on about here? So this was a bit of a penny drop moment for me. This thread from Steve Kim, who's one of the financial analysts at A41 Ventures, who are a Korean-based VC firm that are heavily involved in Terra and some of the other protocols. They've bought into quite a few things, as you can see here, and helped to incubate them. There's a few Terra offerings, Orion Money, Valkyrie and Void Protocol. They're also, well and truly involved in Cosmos, as you can see with Stargaze here, Port Finance on Solana. So they're pretty active. They have some good articles written in Korean, but you can, Google Translate those. Anyway, Steve wrote an article on this concept here about shared security for Luna, and obviously put it in English and did a tweet thread on it, which was great. So it was point 20 that sort of really made a lot of sense to me. Other part of this thread is really just sort of backstory on Terra Luna itself, UST, and the issues with the yield reserves with Anchor, which have been spoken about a lot. As we can see at point 20, he brings up Interchain security model that's coming to Cosmos. Now, this is something that I myself covered in this video about Cosmos, which I'll link in the description below, and also I might put it up as a tile at the end. And it's the bull case on why I'm bullish on Cosmos. But essentially, Luna could sort of steal their lunch a little bit here with what Steve is proposing. So basically saying that Terra validators can run two nodes. They could run one securing Terra, and then they could run another node on a Cosmos chain that wants to leverage off of our security, Luna's security. And by doing so, you're going to get rewards from two chains at once by being a Luna staker. So you earn rewards on multiple Cosmos chains. Now, potentially, if we have 10 Cosmos chains adopt a shared security model with Luna, staking Luna is going to get your normal Luna rewards plus rewards from all 10 of those blockchains simultaneously. And the point that Steve's sort of circling back to is that provides more yield for Luna staking, which means higher returns for the Anchor protocol, which is going to offset the issues of the yield reserves. Now, maybe this has been well known and thought of for a long time, but just sort of hasn't been out there publicly, at least that I've seen. And maybe that's why Terraform Labs and Luna Foundation Guard are so smug almost about the sustainability of Anchor over time, because they know that this could be coming. So that's super interesting. And this point 23, really hit home for me is there's not many better assets out there in the proof of stake realm that Cosmos chains are going to want to leverage off. I mean, Luna's biggest, only behind Solana in terms of total amount staked. So, Terra's already in the Cosmos ecosystem. It's connected to the IBC. So there's probably not a better asset in the IBC connected networks that you would want to use for shared security than Terra Luna. And its market cap is growing every day, as we know. So that's really interesting. As you can see, that Atom is not even in the top 5 here. I'm not sure where it actually sits overall. But Luna, basically, the bigger the market cap of a proof of stake network, the more secure it is. So Terra is going to be super popular as that sort of pristine collateral to secure networks against. So that really surprised me. I hadn't thought that through and joined those dots together. And, I tweeted about it here, and Steve actually responded. I was basically saying, is this in competition with the Cosmos Hub? And he pretty well said yes. No reason why it can't be. So that's very interesting. I think that's just another bull case for Luna that I hadn't even considered yet. So wanted to raise that because I don't think many people are sort of aware of what's coming potentially and how significant just this could be for the Luna ecosystem itself. Okay, moving right along. So Terra owns the curve wars. The curve wars keep coming up as a persistent theme, but I had another sort of penny drop moment when I saw this tweet here. I didn't appreciate how big Terra was in the curve wars, and I mean the actual curve wars over on Ethereum mainnet. So Terra is now the second largest holder of the CVX token, and the CVX protocol, Convex Finance, they hold and own most of the curve tokens. which they can then use to boost their rewards. So if we pull apart this UST goes interchain strategy part 5, it goes into the significance of this and what this means going forward. So as they say here, Terra is the second largest DAO holder of CVX. And this proposal here is all about adding more liquidity from the community pool to these other pools on all these other networks. So if we hover over these, we can see that this is the main pool on the AVAX chain with Curve and Phantom, Arbitrum, and then also we're going to be going towards Optimism and mainnet Ethereum as well, which this is the big one we're already in. And because there's so much UST going into here because of the Lunar Foundation Guard, more and more of the CVX token rewards go to Terra. And it just means more power goes to Terra. So Terra is literally eating DeFi from the inside out. It's starting to own a whole bunch of this stuff. And I don't think this is priced in, guys. Like, yeah, a lot of the TVL that's in Terra is just going to keep expanding and expanding because it has this stranglehold over the governance of these other protocols. So it can keep boosting its own pools, gaining more rewards, gaining more market share. And yeah, it's quite astounding to see that, you know, protocols and other layer ones are starting to own them at the ground level. And liquidity is everything for DeFi. So if you own most of the liquidity, you basically own most of the power over those networks. That's the whole point of UST, is to replace USDC and Tether, which is the majority of the stable coin liquidity in these current networks. So yeah, you can see here, they're going to keep expanding this out into all these other applications. As we go down to the bottom here, there's a nice little TLDR that you can briefly read here. But basically, yeah, they're going to be borrowing more and more funds out of the community pool. Now, a lot of this stuff isn't permanent. It's just there for liquidity for a period of time, and afterwards people could vote to sort of pull it back into the community pool. But it works such wonders for providing more liquidity for UST, and it makes it easier for people to adopt UST, moving out of stablecoins on other chains directly into UST. So that's really important. And this flywheel is just gathering more and more momentum. So the other part to this tweet that's very interesting is just below here. Terra is about to win the curve wars in a big way. Announcement soon. I actually responded here saying, I wonder if it has something to do with Retrograde Money. And Retrograde Money themselves actually liked it. Maybe that's just because they're, you know, they like being tagged and stuff. But also further down here, other people have started referencing Butterfly. And if we go back up the top here, Butterfly is the token for Redacted. So Redacted is basically saying here, it's a complementary sub DAO for Olympus DAO. And it's the same kind of model that Convex uses, but for a bunch of other DeFi apps. So Curve and CVX basically one and the same, but also Ohm. And they're saying here that they want to extend Ohm's influence into the greater DeFi ecosystem. So as I've mentioned previously, Olympus is coming to Terra, and I know Apollo DAO is going to be using them. So the fact that this is called Redacted and it started trading like at the start of the year, around the time that the 3 Redacted series tweets came out from Doe, I'm sort of joining some breadcrumbs together here. This could be nothing. It might be in direct competition to Retrograde Money. You know, maybe Retrograde is the complementary sub DAO on Terra for Olympus. Who knows? But there's definitely something going on here. And if you have a look at the Retrograde Money docs, it goes into the boosts and how all of that works. So super interesting stuff, guys. I'll let you draw your own theories out here, but it does look very interesting if you see what's going on in the background. It feels like there's something significant coming. Okay, so last little bit of news I wanted to cover is more UST adoption. And this is pretty significant too, that a couple of exchanges are now using UST as their base pair. So they haven't just added some UST pairs, they're actually getting rid of USDC and USDT Tether pairs in favor of UST. So here's one exchange that's done that itself, and also Zigzag exchange. So this, I believe, is one of the Starknet rollups on Ethereum, an exchange running on there. So they've decided to get rid of USDT and USDC as well, other than a pair with UST. So you can trade between the two. but all of the other native pairs are going to be in UST. So it's just further adoption for UST, and you can see that these community spend proposals, which was part of these, you can see the effect that it's having. It's really starting to work. And, other apps that aren't in Terra directly are adopting it, and other exchanges. So it's very encouraging for the ecosystem. It's really gaining a lot of momentum, and it just continues to keep gobbling up the rest of DeFi at a rapid pace. Anyway, guys, that's all I've got for today's show. I hope you found that useful, and thanks very much for watching. Cheers. Thanks very much for watching. If you enjoy this content, smash that like button, hit subscribe, and maybe consider watching one of my other videos.